Shares of Cisco moving to the downside here this morning, off just about 2%. The company reporting earnings for the first quarter of 2025, topping the street's expectations on both the top and bottom lines. But you are looking at a bit of pressure here in the early trading action. A lot of that having to do with the conservative, or at least how the street is viewing conservative annual forecast. For more on this, we want to bring in our guest here for about what's next for the company. We have Scott Herren. He's Cisco's CFO, Chief Financial Officer. Scott, it's great to have you back here on Yahoo Finance. Thanks so much for making the time. So it looks like your numbers for the most recent quarter were very strong. The street, though, focusing on that annual guidance. What's your reaction to the move that we're seeing lower in shares today, maybe what the street is missing?
Yeah, thanks for having me again, Sean. It's always good to see you. And I actually feel really good coming out of the quarter. We were strong on the top line. So we just reported our first fiscal quarter for fiscal year 25. Strength on the top line ahead of expectations at the high end of our guidance range. Strength on the bottom line, 4 pennies above what the consensus and above the high end of our guidance range. We took up our numbers for Q2 relative to what consensus had been, and we raised the guide for the full year. We took up the full year by $200 million and by 8 pennies. So, I'll let the investors decide and the traders decide, what they think about the share price. I'm focused on the things we can control, and I feel really good about the momentum that we've built in the business right now.
Let's talk about that momentum, because it was the fourth quarter of declining revenue. Scott, what's going on there? When is that going to turn around?
Yeah, as you recall, Sean, the last time I was here, we talked about we had a very significant compare quarter. So this was our Q1 of fiscal 25. Q1 of fiscal 24, we cleared a lot of the excess backlog that we had built up during the supply chain constraints, as we couldn't get our hands on components. We built up a significant backlog, and then our team did a great job. Our supply chain team did a great job clearing that backlog very quickly. And we had a very significant, somewhere between $2 and $3 billion worth of excess backlog that shipped in the prior Q1 in the compare point. So that's why you see the negative growth on the top line. When you look at demand, if you look at the order growth, we talked about this on the call, was very strong. Double-digit order growth in enterprise, double-digit order growth in service provider and cloud. We had double-digit order growth in all three of our major geos. So it was pretty broad brush strength across the board and across our product lines.
Scott, you mentioned the growth in orders now coming back online, and I think it's a big question here for investors, for analysts, as we head into 2025. I'm curious what you've seen even within just the last week. Now that we're post-election, we have some clarity within the White House. Are you starting to see a more willingness to spend from some of your clients?
Well, again, I don't want to comment on the current quarter that we're in, but, our expectations as we look ahead is based on the strength we saw across products and across geos, we'll continue to see that. That's what was embedded in our guide for we're in our second fiscal quarter right now. It's hard to predict, what's going to happen from a political standpoint, but when you look at the things that are going to drive government efficiency, right? We've got this Department of Government Efficiency now. That's about increasing productivity, and technology is always going to be critical to increasing productivity.
So is this good news then for tech, and more specifically your business?
We certainly see strength across the board. Again, I don't want to comment on the things that we don't yet know on how that's going to play out, but we see strength across the board, and it's really on the back of a portfolio refresh that we've done over the last couple of years. Great execution inside the sales team through the quarter that we just closed, and a view of AI really beginning to ramp. And our play in AI is actually quite strong. One of the data points we gave on the call last night is we saw more than $300 million in orders, AI-specific, AI infrastructure orders during the first quarter, during the first 90 days of this year. And that puts us on a nice track toward the $1 billion, more than $1 billion worth of AI orders that we expect for this fiscal year.
Yeah, I'm curious too, just to stick on the impact of the incoming administration for a second, and then we'll get to some of the AI goodness. When do you expect to be able to get some clarity on some of the delayed deals that you all have had with government agencies? And do you think that an incoming administration could fast track that so that when you're dealing with the balance sheet, you can officially kind of put that revenue on the bottom line?
Yeah, again, I'm not a political analyst, but the fact that we've got now, I think, Republicans controlling both sides of Congress, and we've got a Republican White House, should ease the process of getting to a budget, which will then obviously get us through the continuing resolutions and the Fiscal Responsibility Act. That was really a bit of a crimp on our U.S. Fed business during the first quarter.
All right, let's get to the AI goodness here. I know that some of your hardware has NVIDIA GPUs. They're the most effective, but as you know, Scott, they're really expensive. Are you looking to change that at all? Would you consider switching to AWS chips that are a little bit more affordable? Have you had those conversations in budget meetings?
You know, as we look at the build out of AI infrastructure, and now what we're talking about is less on the web scaler side, on the hyperscaler side, and more about how enterprises are going to build out their own inferencing infrastructure. We'll work with whoever our customers want us to work with. They want us to work with NVIDIA. We just launched our AI pods, right? Which think of that as inferencing in a box that you can just put in. It's got our UCS servers with NVIDIA GPUs on it. It's got our backplane control, and it's got our top of rack switch. That just launched, and that's based on customer pull. To the extent that customers want us to work with others in the GPU space, that's something we'll take a hard look at.
So Scott, you're a financial guy. You're the perfect person to talk about when it comes to cost cutting. Obviously, the efforts that you laid out just a few months ago. Do you have plans? Are you comfortable with some of the moves that you have made, or do you see a need to tighten your budget at all as you look ahead to 2025?
Yeah, I think one of the bright spots from last night, Shauna, was the strength that we had in our gross margin line, which then fell through to being above range on operating margins as well. There was some one-time benefits in the first quarter, but we see for the full year, our gross margins now about a point higher than we saw just 90 days ago. So I think the work that we've done and the great discipline that we're known for, financial discipline that we're known for, is paying off, and that's one of the reasons that you saw us take up the full year guide. We're 90 days into the year. Right, and we just increased our full year guide by 8 pennies on the bottom line. I think we're in pretty good shape there.
All right, Scott, thank you so much for joining us on the heels of that earnings call. We really appreciate it. Scott Herren, Cisco's CFO. Thank you.